Good morning, all. Thursday, the 3rd of February, day before non-farm payroll. So, Thursdays before non-farm payroll are usually pretty quiet, with traders squaring up their positions before that release. So with that in mind, scalping probably is the best policy for today rather than running positions for too long. I'm just going to run through what has worked. I started off, well, I didn't expect this huge bounce in the stock markets, to be fair, so that caught me up. But yesterday things got back on track, some good trades. As we hit the resistance level in the DAX at around that sort of 15,700, 15,750 area. And as you can see, that really was the high for the day. And we've dropped off about 200 points from there. So that's been a nice little short position. Just basic moving averages, some price action and Fibonacci level, giving me the indication that that would be the big resistance for the day yesterday. So that's looking good. Might even be worth running that short position a little bit longer. But if you're a subscriber, you've already got the report on all the levels anyway, so I won't go into that. Again, S&P, another one, moved nicely up to the 61.8% fib. We had good resistance there from previous price action and a trend line. Actually, if I scrunch this up, you can see the trend line going back. There we go. That'll do. Anyway, it covers a couple of lows there. So quite a lot going on at that resistance level. 45.80, 45.90 was the resistance level. We've backed off there by almost 40 points. So again, that trade's looking good. Again, you've got your support levels and the other bits and bobs for scalping on the reports for today. So I'm not going to go into that in too much detail. Nasdaq actually topped out exactly at the next target. Now, I didn't, for some reason, I just thought this could continue higher. So I didn't suggest a short position at that point, but it was the high of the day. So if you did try a short position, again, that is looking pretty good. Gold, well, there's not much to be said about gold. I've got resistance at 1800, 1805, but we're not really going anywhere. We're just hovering around that resistance level. So I think that's a bit of a dead one, that one. US dollar yen, I have been talking about a potential head and shoulders pattern for quite a long time. Let's have a look at that on the daily chart. That's a lot clearer. Obviously, we are sinking towards that neckline and support. There's also going to be support from the 100-day moving average by the time we get there. Small recovery today, so we still have to see if that right shoulder forms. We can't take it as a given. I did suggest 3 or 4 days ago that 3 days ago after this negative candle that we might turn lower, and brave traders could suggest a short position. If you did jump into that short position, you are already looking at a really good profit. But do bear in mind, there is no guarantee that we will break this neckline. So if you are short, I would certainly be covering as we approach it. Yen pairs have actually been quite good to chart this week. Euro yen, good resistance around 129.40, 50. That's just been a real nice scalping opportunity. Every time we've hit it, we've come off. So in my theory is you keep doing it until it doesn't work. So if we break above 129.60, that trade is done. But until then, it seems to be working. So if you can keep scalping sort of 40-50 pips out of it, why not keep trying? On the 4-hour chart, it does look like Aussie's in more of a sideways trend, but when you look at the daily chart, it is clearly in more of a bear trend. Here we go. Let's scrunch this one up. Probably have to look at the weekly chart really, but look, very clearly in a bear trend, the Aussie for a good 9 months or so. So I'm thinking this is a bounce in a bear trend. Probably gone a little bit further. I'd say a little bit quicker than expected. Maybe not further, but it bounced very, very strongly. I've got resistance around 71.80, 71.90. I'm not saying we'll get there. We didn't quite get there yesterday. We missed it by about 20 pips. But that, for me, would be the level of the day. Kiwi, same sort of thing. Definitely in a bear trend. Has been for quite a while. 66 sort of 80, 66.90 is the resistance level for me. There you go. Look, there's the daily chart showing a very clear bear trend for about a year now for the New Zealand dollar. So at this moment, I have to assume that this is just a bounce in a bear trend, and eventually the bears will take control of this market and push it lower again. I'm going to finish up on WTI crude, not something I usually talk about, not something I'm really focused on, but we've had a hell of a run. It's been a real strong market. We got up to $89, I think it was yesterday. We've got up to nearly $90. So that is an incredible run for oil, big recovery through December and January. I've talked about it in the report, how we've got this series of dojis where the market, let me just try and get this where I want it. A series of dojis recently in extremely overbought conditions. Look, this has been overbought since the end of December, so it's been overbought for over a month. And now we're starting to see a series of dojis. Dojis is when the market closes near the opening. So the market will trade up, the market will trade down, leaving these long upper and lower wicks and small bodies with these candles. And basically this just shows indecision. It's not something that bulls want to see in a strong bull trend. They want to be seeing big green candles. So this shows indecision. It shows that the bulls might be losing their power. It shows that in these severely overbought conditions that we could even turn around. This series of dojis might mean the market turns around. I would be looking for a strong sell signal. I would like to see some sort of bearish engulfing candle or just something more tangible that I can say, okay, look, this is starting to show that the bulls are losing control and the bears are gaining control. At the moment, it just shows that bulls are kind of losing control and the market is petering out. Anyway, with that, if you decide that you think that it could be time for the market, having hit a big $90 number, that's also quite a psychological number, that there might be some profit taking, the market might turn down, then hopefully this sort of information I'm giving you might help you make a decision. Okay, that's it for me for today. I think I might do a video in the morning for non-farm payroll, but unless anything's moved, it's probably just a waste of time. I'm just going to be repeating myself. But of course, all the reports will be ready for you by 7 a.m. at the absolute latest. Okay, good luck if you're in the financial markets today.